Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we'll be looking at what has been happening in the markets over the course of the day. And of course, later on, we'll be looking at what to expect as we head into the New York session. So there's quite a number of things currently happening in the markets. So we'll be starting by focusing on the economic calendar. So we'll be doing this right away. First things first, since morning, we haven't had quite a number of data as usual. The economic calendar seems awkwardly quiet since the beginning of the week. So the key highlights are the big jump in Japanese inflation, CB leading index in China coming in at negative 0.3%, which is a slight improvement from the previous number, but not yet a big surprise. Then we have the data that was expected at exactly 4 p.m. And we already have the housing price index data coming in at 0.8%. So this was just released about a minute ago. So if you look at the market, you should be seeing some form of reaction to that. So from the dollar index, we don't have much happening here. There seems to be a little to no volatility from the data release. So looking at other pairs, for instance, pound USD, looking at euro USD, we don't have much overreaction from that data point. So it's within reason to take your time and then process what this means. So even though the housing price index jumped 0.8%, meaning that housing prices are moving higher, this did not have an immediate reaction in the markets. So this leaves one key data point that is expected to cause volatility in the markets for the day. And this is the CB consumer confidence. So the data point is basically a level of composite index based on surveyed households. It basically takes on 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So it's very important to know the consumer confidence because it tends to have a direct impact on consumer spending, which is a leading indicator of economic activity. So in the previous reading, as you can see, it was 106.1, and now we are expecting a report of 105.5. So try to make this quick. So we also be looking at new home sales data as well as a Richmond manufacturing index, and all these will be released at the same time at 5 p.m. And the last data point for the day will be the FOMC member Bowman issuing a speech. So besides this, the biggest story in the market right now is the potential for the US government going into a shutdown, and this could happen as early as next week on the 1st of October, and that should be from Sunday. So on Monday, the market could open up with quite some good volatility. So when you talk over government shutdown, it's basically when the government is unable to pay its bills because several funding laws have not been passed or approved by the president. So currently, we know there's a huge divide between the US Congress and the US House of Representatives. So on one side, the US Congress is Democrat dominated, meaning that the Democrats have a majority. But then for the House of Representatives, the Republicans have more votes. So in this deadlock, where the law has to go through both houses and for it to get approved by the president, so several financing bills have been delayed and they have not yet been approved. So as the federal budget starts on the 1st of October, the US will not have any finances to honor its bills, and this will become quite a huge problem. So the points of contention right now are on two key issues. One is that there's quite a challenge between the two houses regarding the immigration policy, where on one side, the current administration is allowing too many people through their borders, and it's becoming a labor problem. And of course, the other key contentious issue is the spending that the government is implementing, especially towards supporting Ukraine. So Republicans are completely against this, whereas the Democrats have been in support. So until they agree on these two key issues, then the government could be led into a shutdown, which the Republicans are counting on in order to negotiate their case and have some level of political gain or political mileage while getting into a deal. So government shutdowns don't last for long. They normally stay for about a week. The largest we have seen was about 35 days. And of course, we have shorter ones lasting 3-4 days and so on. So normally, tracking back all the way back to 1976, the government shutdowns have not been very fair to equities markets. So whenever there's a shutdown, it mostly leads to a big sell-off in equities. So on average, the S&P 500 has sold for about 10% whenever there was a government shutdown that lasted at least a week. So if this was to happen, then there's a high likelihood that we could be seeing a big sell-off in US equity indices. So that's the key concern in the market right now. And of course, if there was a shutdown happening from next week, several departments in the US that are considered to be non-essential could be forced to send their employees away on unpaid leave. And some of the key departments that could be affected include the Statistical Bureau of the US. So some of the data reports that we normally get every week would also be missing in the markets. For instance, next week will be the first week of the month. And on every Friday, first week of the month, we normally get the non-farm payrolls. And this data could be missing if the US government goes into a shutdown. So other key reports include GDP growth. We could miss that data too. Consumer price index or the inflation report could also be missing. So those are pertinent issues that could eventually affect traders as well as how the market behaves going forward. So I think I've written a detailed account on the same. So I'll try and check it out and then share with you. So when you have time, you can go through it. And I keep posting these updates on Twitter, so you can always follow them and use them to make sure you're more informed and react in the market accordingly. Check on gold. It was massive. Gold on executive account finished as just now. Premier account is still well. It's only in FX Pesa. Hi, Dennis and Lemuel. Can someone explain what happened? So I don't have any information on what's currently going on. So I'll be checking that out and I'll try to communicate with the team to see what's currently happening, and hopefully everyone will get sorted. So if there is any major issue, just saw it. This is crazy. It's not something that you experience every day. So my advice to you, if you are materially affected by this, I think the best thing is to file a ticket with FX Pesa support, and you will be provided with the necessary support. So don't fear or get panic out of this. Just write a support ticket, and this will get resolved as soon as possible. So sometimes it's just a data glitch. Sometimes we don't know what's happening. So we just have to file a case with support, and then we will know what went about. So it could be the market, it could be data. I don't know at this point, it's just speculation. So just make sure if you are materially affected to write a ticket, and I'm sure everything will be just fine. So a good question here from Apollo. Does the shutdown has any effect on DXY strength? Definitely. So investors who are expecting some material effect from their equity holdings would seek to hedge their positions by buying the dollar. So there's a good chance that we could also be seeing the dollar continue to accelerate as this rotation happens away from equities and into the dollar, waiting for the potential shutdown to pass. So remember, the shutdown is not guaranteed. It's only that the Congress has a very small window between a potential shutdown and getting the bills passed. So that window is narrowing down every day. So between today and which is Tuesday and Sunday, if they are not able to pass those laws, then it creates 100% chance for a government shutdown. So that being mentioned, let's look at some key technical price action levels. So I'll be starting with the dollar index. So clearly, you can see it has been pulling back during the London session. And as we approach the end of the London session, it seems like the New York guys are here and back propping up the dollar. And with a stronger dollar, then there's a high likelihood that we'll be seeing these other measures continue weakening to the dollar. So for the pound, we were projecting this trend line and the 15-minute chart to be acting as the resistance. But clearly, over the last couple of hours, the market has found significant difficulty breaking this area here. And now it seems like a signal for the market to continue trending downwards. So for USD JPY, the momentum keeps moving on quite well. So on the 15-minute chart, you can see the attempts to pull back, and now the market is finding support. So as I had sent this message earlier in the morning session, there's a very good chance of continuation. Overall, we are expecting USD JPY to continue moving up to 151.916. So now that we have had a good pullback, it represents a good entry opportunity to trade the continuation in that direction. So for Euro USD, a very nice bounce from that support level. It seems like the pound was the one which was a little bit struggling, but the euro may have bounced on quite well, but the overall direction is downwards. So any pullback upwards creates an opportunity to go for a short selling position, whereas USD CAD remains within this triangle. I remember mentioning these. So for the triangle, it's somewhere around this area here. Just want to highlight it. Yes, so this is the kind of consolidation you're having. So we are on an upswing. Our target is 1.35224, and then from there we decide whether the market breaks or moves back downwards. So as for gold, I would say ignore this, the big spike that just happened, and now focus on the market without that spike. And clearly, it seems like there's a break. So we were monitoring this triangle, and as you can see, the market has been making these nice swings. So this area was acting as a very strong support, but now with a strong dollar, there seems to be a high likelihood that the market will be trading further downwards. So a break below this would mean we see some further downside pressure on gold prices. So from the forward chart, this is how it looks like. So some potential for downside momentum is there. With the short-term targets being the recent low. This is the low that we saw 2 weeks ago of around 1901 or 1900. AUD-USD was pretty strong, playing along this support, and it's bouncing on quite well. So some further upside momentum is expected. US Tech 100 still within the consolidation, no breakout yet from the 1 hour chart. The NASDAQ seems to be still trading sideways within these two trend lines. So no breakout yet. And of course, for the US30, it seems the one that is completely bearish. So the key level to watch would be on this support level. So if I move to a smaller time frame, zoomed out, then you can already see if you're already in the trade, then the target is just nearby. And if you're not in the trade, then the idea is to look for a potential entry if the market happens to break below this zone. So if you are already in a short, this is the target. If you are not in the market, you wait to see how the price will react at this particular area. So Brent oil, we had the pin bar forming here in the morning. So we mentioned that the following candlestick was expected to be a signal. Somehow it did not emerge as a signal, came out as a spinning top candlestick with the long tails on each end. So that candlestick was the signal here indicating bullish momentum. So the first green candlestick was the evidence of bullish entry. So from here, it basically represents a nice entry point for a bullish position. And now the idea is about targeting, looking for the right area to set your target. And if you zoom out from this chart, you can already see that this was a pretty strong bounce. So we could be seeing the highs of last week being the potential targets for this bounce. And this is an area where the market found resistance for 3 consecutive days last week. So the area here, right here, and right here, so which makes it a nice target for the current bounce. So there's a likelihood that the price could get to around this area of $93.525 per barrel. So as for the French 40 index, after the big jump here, we mentioned that we are looking for short selling positions in the direction of the trend. So it seems the market failed to move higher. So now the potential for market dropping right back to the day's low seems likely as we enter into the New York session. It's the same thing for the Euro 50 as well as the UK 100. So as you can see, the market broke this area here, retested, went down, retested the second time. I was unable to get right back into this zone. So now it represents an opportunity to now potentially move back downwards. So this area here represents an area where the market attempted to break higher, failed. So this was a major support, now acting as a resistance. So now we are looking at a potential where the FTSE 100 could trade much lower. So today, both indices and treasuries are selling. Usually they are not correlated, i.e. negatively correlated. So as I mentioned, the key topic or event in the market is the potential for a shutdown, and it has the potential of affecting both equities and treasuries in the same direction. So it's not pretty obvious that people will be running buying treasuries, but I think converting just from equities to cash basically creates a higher demand for dollar and of course a higher supply for equities. So good question here. When trading candlesticks patterns, do you know when to enter waiting for a confirmation candle or just direct? I think I just covered that. We had this scenario here. Where was that? I think it was on Brentwell. Yes. So we saw the market trading at this support level here. So this area was a major resistance. I'll show you here. So this area served as major resistance for an entire week. So market broke towards the upper side, kept going up, and now we are back to the same level. So when the market got back to this same level, we are observing the behavior of price around this support level. So from this behavior, what we saw is the market forming a pin bar, which was still bearish. And now we mentioned we wait for another 1 hour to see how the candlestick closes. The second one was a spinning top, and it was not very convincing to go for a buy trade. But then after the third hour, the third candlestick here, then this is clearly indicative of a reversal. And now you expect the prices to start moving up. So after this point here, it is pretty obvious that this is the support level right here. Most recent low is here. So the appropriate area to set a stop loss is just below this area here. And of course, for targeting, when you go for your take profit, you target all the way up to the area that was previously serving as the resistance. So the area is right here, and I've already explained why this area is important. Sorry, not right here, but all the way up. So this area is important because 2 days ago, not Monday, but Friday last week, this was the high. Thursday last week, this was the high. And of course, Wednesday last week, it was the same level. So if price happens to bounce off this area here, then the potential seems likely that the market could rally all the way back to $93.525 per barrel, which basically represents a very nice risk-reward ratio, where in this case, you could be risking around 700 points and going for a target of 2,400 points. That is more than 3x. So to me, it's a reasonable risk-reward ratio. So that's it for the day. We don't have much. Now you know where to focus your energy on. I hope you have a great day going forward. What's the difference between trading indices and currencies? Indices tend to maintain trends for a longer time. For instance, if you look at the S&P 500, you'd notice how these trends can hold for a long duration, whereas currencies tend to change direction over a short period of time. So for instance, if you go to the daily chart, you can see the S&P 500 being on a bullish run for 5 consecutive months. So this is quite rare when you're focusing on currencies. where they tend to have these swings moving up and down, where if a currency weakens so much, the central bank will do policies that will strengthen the currency. And if it strengthens so much, then the central bank will be implementing policies that weaken the currency. But then for indices, it's always a good thing when they are going up. So when central banks realize that indices are going up, they will not be doing anything to stop it. They enjoy the good political mileage that they get when they continue seeing the stock market going up. So for instance, if you look at the SP 500 weekly, you'll notice that from 2020, 2021, it was a straight up bullish momentum. So the market just kept going up and up. So when it maintains such an important bullish trend, then it basically creates good opportunities for traders. So traders trading indices tend to last longer in the markets compared to traders trading Forex or currencies. How many accounts can you open? I think you don't need so many accounts. If you can get 2, maximum 3, that will work for you. You don't need to have too many accounts for your trading. So as I mentioned, what happened to gold, if it's a market event, it will be communicated. And of course, if it's a data glitch happening on the platform, the natural way of resolving this is by for you filing a ticket with us, and we look into the case and we resolve your issue. So it's nothing to worry about. It happens with all brokers. There's no broker with a perfect data supply and data processing systems. So sometimes it will happen, though very rarely. And when it ever happens, don't fret. Just email or inbox your broker, and you'll always get good support. Where can one get information about companies for trading indices? So you can just track the respective index and see where it is traded and the components of that index. So for instance, if you go to SP 500, I think for SP 500, you can check it on FinViz. Financial visualization. If it's the NASDAQ, go to the NASDAQ website. If it's the Dow Jones, then go to the Dow Jones website and so on. So if you're trading, let's say the FTSE 100 index, then basically go to the London Stock Exchange website and you'll find that. So for SP 500, I can show you directly. Here is the map, and you can get information on all these companies based on how they have been performing. You can also filter to check how they've been performing, let's say for the last 1 year and so on. So this is the FinViz website. It basically shows you the performance of the top 500 companies trading in the S&P 500. And the link is right there. Difference between bullish and bearish. Bullish is anything going up, bearish going down. What's the quiet on cryptos? Did the halving happen? Halving will be happening next year, and it's happening with Bitcoin. So that's when we expect it. We're expecting the block reward for miners to go down by half, which basically means that there will be less supply of Bitcoin, which tends to have upwards pressure on prices. All right, I think I've responded to all the questions here on the comment section. So thank you very much, everyone. Thank you for your time. Make sure that you practice proper risk management. And of course, these sessions are purely educational, not financial advice. Neither are they a recommendation to trade. So always practice proper risk management. How do I open a Premier account when I have the executive already? So just log in to the FXPesa website and then create new account. So while you create the new account, then select the Premier account, and that will work well, and you'll be able to log in and operate as usual. Will the American shutdown has an impact on the strength of the dollar? Yes, probably. So it's not a one-time thing. So the strength of the dollar could already be priced in as we speak right now. So if you look at the dollar index, it's already strong, and it's basically investors betting on a potential government shutdown. So in this case, if you look at the dollar index, it has been on a consistent bullish momentum. And if you look at the weekly data point, you'll notice that we have had the last, I would say, 8 weeks where the dollar index has been gaining, 9 considering last week. And this might be the 10th week where the dollar index is gaining, meaning that the dollar is currently very strong. And investors already knew that there was a potential for a shutdown. And in this case, are already betting on it. So there's still more room for further upside in the dollar index. And I think this will be playing out as we approach the end of the week. So thank you very much, guys, and see you on the next one.